I'm switching to the English now, yes? Michael Saylor, welcome to Innsbruck.
Yeah, thanks for having me.
The great thing about talking yesterday is that we do come prepared, so we have three main topics today, but I do have one question that we all want to know, is do you ever get tired of talking about Bitcoin?
No, I'm running on Bitcoin.
How many hours do you do that every day? There's so much material of you out there.
You know, I think every day you get up and there's something new that's going on in the Bitcoin ecosystem to think about. And it never stops until you go to sleep. And then on the weekends, it's still happening. And some people think that's a negative, right? Some people like the idea that the stock market stops trading at 4 p.m. on Friday and it doesn't start trading until 9:30 a.m. on Monday. But I think that's a weakness of the 20th century. And I think the differentiating factor of Bitcoin for the 21st century is it never sleeps anywhere in the world. And that means there's always something to consider. And that makes it the most interesting asset in the world. And that's a competitive advantage. In the world we live in, there are hundreds of thousands of things competing for your attention. And the winner is going to be the most interesting thing.
I mean, that is pretty true. That is pretty true. Also, weekends are for saving the fiat system, you know, crisis situations. Since we've talked last year here in Innsbruck, there have been many things happening. One of the most important thing is BlackRock. BlackRock now wants to do an ETF. There is dozens of other ETFs applications out there. Just please give us your picture of where Bitcoin is standing today as an asset. What has changed in the last year or so? Is there reasons to be optimistic? Is there reasons to be fearful of an actor like BlackRock?
I think that from the years 2020 to 2024, that was the great transition of Bitcoin from being a retail asset in the crypto ecosystem, offshore, unregulated, poorly understood, the Wild West. And by the end of 2024, it will have emerged as an institutional asset in the mainstream financial ecosystems on Wall Street. Bitcoin's coming to Wall Street. And this is, it's like, I guess like college, you know, you started as a child and then you left home, and freshman year is very scary. And you've got 4 years of adjustment, and you encounter people that are better educated than you or smarter than you, that come from parts of the world you've never been to, maybe that have more power than you. And initially it's a bit scary, but by the end of your college education, you're ready to go out in the world and compete with everybody else. And I think that coming out of 2024, Bitcoin is emerging as an institutional grade asset, and it's not going to be competing with the Bitcoin forks or other proof of work coins, or, you know, Sam Bankman-Fried's favorite yo-yo token, but it's, or, you know, apes or cats or, you know, crazy crypto things. It won't be thought of as that. It's going to be competing against owning a block of real estate in London, or owning New York, or owning a ton of gold, or owning a building, or perhaps owning $1 billion of the S&P index, or owning 1 million shares of Apple stock. And so definitely nobody thought that in 2019 or 2020. But if Bitcoin's going to grow up, right, Bitcoin's on a path to go from nothing to 500 billion to 10 trillion to 100 trillion dollars to 200 trillion. At some point, it should be 10, 20, 30% of all of the wealth in the world. If it's going to grow up like that, then it's inevitable that it had to be embraced and was going to be embraced by Wall Street. So if we consider the significance of BlackRock and the ETF, First of all, the real important point is there's broad-based consensus now that Bitcoin is an asset class. And that's a major revolution. If Fidelity and BlackRock and if 10 other ETF issuers all agree that Bitcoin is an asset class, right, it should be 10x to 100x bigger than it is right now. There's also broad-based agreement that sometime in the next year, a spot ETF will be approved. And that's also significant. I think the third significance is this is not BlackRock taking over Bitcoin. This is Bitcoin, being embraced by BlackRock, right? This is Bitcoin being embraced by Wall Street. Now, nobody on Wall Street, none of these ETFs, none of these leaders of these money managers have said, we just heard about Bitcoin, we're here to fix it. What they've said is, we heard about Bitcoin, it seems like everybody in the world wants it. And since we offer people gold and bonds and equity and other forms of investment options, we have a vacuum and we are lacking and we won't be complete until we're offering a Bitcoin product. So I'm not concerned about it. I think it's to be expected. I also think it's everybody that joins the Bitcoin ecosystem with humility helps, right? When Block shows up with Cash App and they build Bitcoin into Cash App, with respect to the protocol, they're helping Bitcoin. They're providing an on-ramp to Bitcoin. Not the only one. When you create a new signing device, you're helping Bitcoin. When you create a new node or any kind of software that helps you run a Bitcoin node, you're helping Bitcoin. When you're buying Bitcoin, you're helping Bitcoin. How you buy Bitcoin, right, is of less importance than the fact that you respect the protocol and you're assisting it. So there's a whole class of investors that cannot currently buy Bitcoin and they can't support Bitcoin. Right? You could say, well, one way to support Bitcoin is I buy the Bitcoin, I hold my own keys. That's true. That's probably the purest way to support Bitcoin. But MicroStrategy supports Bitcoin by buying Bitcoin. And there are a lot of investors in MicroStrategy that can't buy the underlying asset, but they can buy the MicroStrategy stock. That's another way to do it. We're levered long, so you have to study our financials because you have to get comfortable with the way we do it. And there's 1,000 pages to read. So a lot of people might not want to read the 1,000 pages and figure out whether or not MicroStrategy's Bitcoin strategy is good or bad. So a spot ETF allows them to buy $100 million of Bitcoin in 1 minute without putting up any cash, without rebuilding all their systems. So anybody that's got $10 billion of capital, they have a compliance system, an accounting system, a compensation system, a control system, a risk management system. They have a bank. The bank actually, they have a collateral system. So all of these systems allow an employee working for the company for 2 years to punch a button and buy $10 million of something like Apple stock or government bonds or S&P index. And so that's what you would expect if you're running the pension fund of a fireman's union. You expect those controls, and if you're going to create a scalable system, you need all of those systems, if not to make sure that no one steals all your money, to make sure that you actually pay your taxes and you compensate people, and then you can do your accounting and you can do your reporting. So they can't buy Bitcoin right now. And the only way to buy Bitcoin the hardcore maxi way is they have to rebuild every single one of those systems. It took 30 years to build those systems. They're not rebuilding a parallel system that took 30 years to buy one new thing. So if Bitcoin wants the support of Wall Street, then it needs to be built into the BlackRock money management systems and the Fidelity money management systems. And this ETF is critical for that because the existing ETFs, the futures-based ETFs, are bleeding 10% of the capital a year. If you put $1 billion into a futures-based ETF, you will probably pay $100 million a year in lost capital because of the inefficiency of the futures market. So right now, people don't have, that is, institutional investors don't have any easy way to support Bitcoin or buy it in an economically responsible fashion. And so they just stay out. When you see these spot ETFs get put in place, you're going to be creating the equivalent of a 6-lane superhighway between Wall Street and Bitcoin. And now you're going to see billions and billions of dollars flow. In some cases, billions a week. In some cases, could be billions a day. And until you see it, you won't see any capital flow from those institutions. It's trapped in the 20th century asset classes.
We've seen a lot of activity from Gary Gensler and the SEC regarding differentiating Bitcoin from crypto. Do you expect this to continue? Do you expect more clarity even before the ETFs are probably approved? And also, are you starting to see a narrative change from Wall Street? Because if somebody like Larry Fink is going to embrace Bitcoin, suddenly there is no reputational problem there by embracing it. There's more reputational problem by not embracing it, but Bitcoin still has this image, right, that in the media, and it's not gone away within like a day or two. But can you see the first signs?
I think the most important thing that's happened in the past 24 months is that Bitcoin has emerged as a legitimate institutional grade asset and as a legitimate ethical commodity. And if you roll the clock back to 2019, there are a lot of people that weren't sure, is it a commodity, is it a security, is it legitimate, is it going away, is it not going away? To be established as a legitimate institutional asset, it must be a commodity. Because if it's a security, it's an unregistered security. So an unregistered security is not an institutional grade asset. No legitimate investor on Wall Street, no one who is a custodian or a trustee of someone else's money can buy an unregistered security. It just can't happen. So what you have is a question, is Bitcoin a commodity or not? That has been resolved over the past 24 months via the endorsement of 2 heads of the SEC, Jay Clayton and Gary Gensler, the head of the CFTC, Rostin Behnam. It has been underscored by speeches by the head of the EU Central Bank, the head of the US Central Bank, the head of the Treasury, Janet Yellen. It's been implied, if not stated, in statements by the White House. It has been endorsed by leading Republican candidates like Ron DeSantis and leading Democratic candidates like Robert Kennedy. It has been endorsed and underscored by senators like Cynthia Lummis and Ted Cruz, and by Congress people like Tom Emmer, right, like Patrick McHenry. And it has been acknowledged by a nonstop parade of money managers. Last week, Mohammed El-Erian pointed out that it's not going away. It has been acknowledged by Larry Fink on CNBC, on Fox. It has been acknowledged by any number of journalists on CNBC, on Fox, on Bloomberg. If you roll the clock back to, I guess, Tesla Day or Elon Musk Day, when Elon announced that he bought Bitcoin, the day before, everybody in the crypto community and the Bitcoin community lamented the fact that mainstream media never wrote about us. Right? It wasn't that long ago, 2020, there was no mainstream coverage. And then all of a sudden, there was an avalanche of coverage. So the fact that Bitcoin is on the front page of the Wall Street Journal, the New York Times, Bloomberg, it's on television, right? And it is acknowledged as an asset class not going away. That's probably the greatest achievement of the past 24 months. When FASB announced the support for fair value accounting, They wouldn't have done that unanimously if there was any question as to whether Bitcoin was a commodity or an unregistered security, right? If Bitcoin's an unregistered security, then it's little better than a pump and dump scheme of a penny stock or a boiler room, antic from the Wolf of Wall Street. And, the accounting profession is not going to take up the cause of some random penny stock that someone wants to pump and dump. So what you have is a sequence of activities by politicians, by regulators, by the mainstream media, by accountants, by the legal profession. I left out judges, lawyers, but more importantly, judges who have actually acknowledged Bitcoin as a commodity, an asset without an issuer. And so if that's the case, right, I've said many times before, I've said, if it's not going to zero, it's going to a million. The reason it would go to zero is it's illegitimate or getting banned. And so the question is it illegitimate? Well, obviously not. It's an asset without an issuer. It's the world's first digital commodity and the greatest digital commodity. It's the only globally acknowledged digital commodity in the world. There's controversy about everything else. Bitcoin is the one non-controversial thing. So it is a legitimate asset. And is it being banned? Obviously not. The Chinese haven't banned it. It's deemed property in China. The Russians haven't banned it. It's property in Russia. The Americans haven't banned it. It's property in America. All of the controversy in our marketplace right now is surrounding crypto exchanges, the trading of unregistered securities, other tokens, and stable coins. And then the usage of these crypto tokens as a high-speed dollar substitute, a currency substitute. There's lots of controversy there. There will continue to be controversy. It is unclear how all that sorts itself out, except for the fact that there are two great conclusions you can come to over the past 24 months. Wall Street, the regulators, and the mainstream investment community endorses Bitcoin and appreciates Bitcoin. And everybody's skeptical of the rest of the crypto ecosystem, right? Bitcoin, yes. Crypto, not so sure, right? So that's where we are right now. I have met with lots of executives from these companies that are bringing spot ETFs to market. I can tell you for a fact, nobody wants to fix Bitcoin. Nobody wants to change Bitcoin. They've approached it with humility. They've approached it with grace. Their view is Bitcoin is a digital asset. People in the world seem to want it. We should do our part to provide services to make it easy to acquire and hold Bitcoin. Now, in time, right, the first and easiest step and the most critical step is that spot ETF, because that'll open up the super highway for, it's like a power line for hundreds of billions of dollars of capital to flow into the ecosystem. But eventually, Google and Apple will embrace Bitcoin. And when Google or Apple embraces Bitcoin and Apple puts some sort of Bitcoin signing device into the iPhone, there will be some people that will be skeptical and they will say, oh, we could never trust Apple. And that's reasonable. And other people will say, oh, well, it's an option for the masses that don't know how to, operate their own hardware wallet. And there'll be a debate. And then there'll be an avalanche, and then Apple, and Amazon will do something, and then Microsoft will build it into their browser, and then people will hate that. And then some other company will come up with a better Bitcoin-only one, and we'll like that. And maybe they'll succeed, and they'll grow. It'll be 10 or 100x, and maybe they won't. And then maybe at some point we'll wake up, and there'll be $4 billion, which will be of 4 billion people, and they will self-custody some amount of their own Bitcoin. And then they will have other Bitcoin that will be in an ETF in their retirement plan because their employer required that they actually have their retirement plan with a securities custodian. And the world will be heterogeneous. And we should embrace everybody that supports Bitcoin, however they support Bitcoin. You won't agree with them. Maybe you won't like that nation, and you won't like that company, and you won't like that money manager. And you will always have the option to do your own thing, and that's what makes Bitcoin beautiful. But we shouldn't actually discourage people that want to bring their resources to bear. And if you have $10 trillion worth of client money, and currently they can't invest in Bitcoin, and you rewire your systems to allow them to buy Bitcoin, then you're a friend of Bitcoin. You're not an enemy of Bitcoin. And until someone says, oh, by the way, we also want to change the protocol, right? They're our friend. When they decide they want to change the protocol or fix Bitcoin, then you have to take a different position. But I can say from personal knowledge, nobody on Wall Street wants to fix Bitcoin. They just want to be they want to join the party. They want to be helpful.
Yet, for some reason, we do have a debate about the 21 million hard cap. We do have a debate about the so-called Bitcoin security budget in some circles of the Bitcoin community. What is happening there? Are you worried about that? Yeah.
I've met executives that run companies that have 100 million customers. I've met executives that run companies that have hundreds of billions of dollars of capital. I've met executives that manage trillions and trillions of dollars of capital. When I talk to them about Bitcoin, they say, oh, we like Bitcoin. We love the fact there's a 21 million cap. We like the protocol. This is great. Not a single one of them suggests changing it. You know who suggests changing it? It's people that have no money, no power, no influence, who are looking to make a name for themselves, right? So they're trolls. It's on Twitter. If you actually post, Satoshi did a good job, Bitcoin is great, let's support Bitcoin, well, you're one of a million, and people might agree with you, but you don't stand out. But if you go on Twitter and say, I found a defect in Bitcoin, I think in 18 years, this bad thing will happen to Bitcoin. Well, then you get a lot of engagement. A lot of people disagree with you, but you're irritating and you're enraging, right? And they say enragement is engagement. So I think that that people on Twitter are very sensitive. Nobody in the real world is worried about this, right? Nobody off Twitter is worried about this. On Twitter, you see people all the time that are provocateurs. And so they will just pick something that works fine and they'll attack it, right? And they'll question it. But, who wants to change the code and fix Bitcoin? Well, Greenpeace, why do they want to do it? Because they got paid $5 million by enemies of Bitcoin to do it, right? Right. So the people that are questioning it are people that want to raise money. If I want to raise $10 million of capital, to buy Bitcoin, it's very difficult. Okay, why do you want my money? I want to take your 10 million, I want to buy Bitcoin. Okay, well, I can just buy the Bitcoin myself. Why do I need you? Right? It's very difficult. You have to show that you're providing a service. But if I raise the $10 million to build the next Bitcoin, or to fix Bitcoin, or to do something, and if I can say that there's a defect, then maybe I raise the money. So I really think that the criticism comes from people that are looking to either raise money or they're looking to acquire influence, or it's like I want to get followers, so I go attack somebody or I quibble with them. I fight with a famous person who's got 100x more followers than me, hoping they'll respond to me, so that maybe I get some of their followers. But it's really trollish behavior, and it's more driven by, ironically, by those who have no influence and no money, right? The people that have the billions of dollars of Bitcoin aren't at all worried, and the people that can buy billions of dollars of Bitcoin tomorrow aren't at all thinking about this. What they're thinking about is, how do I rewire my accounting system, and how do I get authorization from the SEC to buy the billions of Bitcoin? They're concerned about more pedestrian things, like how do I integrate it with my system, how do I explain it to my investors, and how do I do it in a compliant fashion?
You've been buying hundreds of thousands of Bitcoin for MicroStrategy. You're an absolute trailblazer when it comes to using Bitcoin as an asset in your company, as a treasury asset. So where do we stand there? What are the next steps? When are we going to see other big companies adopting Bitcoin, maybe even in Europe? And also, if Bitcoin is now embraced by Wall Street, shouldn't the next question be, when are central banks going to enter the frame, and how are they going to do it?
I think that there are really three milestones we need for a massive adoption of Bitcoin by governments, by thousands of companies, by all of the investors in the world. The first and the most important one, the one that's going to dominate this cycle, is going to be the spot ETF. Because futures ETFs are just literally defective, right? If I said I'm going to charge you a 10% fee per year to invest your money, like, your money's gone in 7 years, right? I'm just taking it all, right? So that makes no sense. So the spot ETF is going to be critical. It's going to solve the problem of how do I custody the Bitcoin. Most of these companies and investors, if they want to establish their own custody program, it's very scary, right? Have you noticed how many custodians have failed? And the issue is, how do I find an institutional grade custodian? And okay, well, you could say, like, you should self-custody. Well, how does, who at Microsoft is supposed to self-custody? Right? Like, do you want to you're going to give $100 billion of Bitcoin to the CFO and have the CFO walk around with the private keys? Like, who wants that job, right? Like, how are you're going to do multi-sig? Well, which 3 people at Microsoft, right? So it becomes a question, and it takes them a year or 2 years to answer the question. And is it possible? Sure it is. It just takes 2 or 3 years. And so if we want mass adoption, we have to solve the problem of custody, and then we have to solve the problem of compliance, right? If I'm an investor and I have $10 billion of capital and I want to buy $100 million worth of Apple stock, I can do it in 30 seconds via BlackRock or via one of my major money managers. And I don't even have to come up with $100 million. I could have a nickel, make a phone call and say, buy $100 million of Apple stock, put the phone down, and have all the money at the end of the day without putting up in cash. And it would be my bank, like JP Morgan, that would front me the money. So you see, it's completely financeable, no money down. I can do it in 30 seconds. And then it flows into my systems, like my accounting system, my compensation system. When Apple stock doubles, the portfolio manager that actually made the buy wants to get paid. So how do I attribute the success of the investment to the person that made the investment when it's changing every minute of the day? How do I pay taxes on it? How do I make sure I don't have a Nick Leeson situation where one portfolio manager makes a $10 billion bet and bankrupts the entire firm, right? So these are all pedestrian problems, but they're solved by that spot ETF plugged into the money manager. That's going to be the number one driver, right? And that's going to dwarf everything else in the near term. The second driver is the FASB fair value accounting. Because if I'm a corporation and I have $1 billion of cash flow this year, I normally would have to either put it into dollars or euros, and I know I'm losing 7% of its value every year in a normal monetary inflation environment. Or I'd have to buy sovereign debt like euro bonds or treasury bonds. And then I'm just losing 2, 3, 4% of its value every year. And I can do one of those 2 things, but I can't invest it in any other property that's going to go up in value. Because, like, how do I buy $1 billion building every month? And then if I need to get 500 million back, how do I sell half the building in one day? So property, like real estate, is not liquid, and it's not fungible. So that makes no sense. So then the question is, well, can I just buy $1 billion of Apple stock? No, because it's a security, and it turns out that there are regulatory requirements that say a public company can't have more than 40% of its liquid assets in securities. So when I have 45% of my, if I have $1 billion and I buy 200 million worth of Apple stock and it doubles, I trip that covenant. And then what happens is I'm an SEC 40 company. And what that means is I can't issue debt and I can't issue stock options. And it means the entire company blows up. Right? Like the entire operating business blows up, right? And so I don't know how to say this in any way other than everybody gets fired, everything comes to a grinding halt. So the question is, if you're a CFO, you think you're going to risk that? Of course not. The board will fire the CEO, then fire the CFO, then fire itself before it will risk tripping over that compliance covenant. So what does that mean? It means that any major company has to have a treasury which consists of cash and sovereign debt. That's pretty much it. And sovereign debt, although it is a security in one way because there's a counterparty risk, there is a waiver, a carve out by the regulators that allows companies to treat it like it was a commodity or like a currency instead of treating it like a security. So when FASB adopted fair value accounting, they actually put Bitcoin pari passu with treasury bonds. What that means is Bitcoin is the first financial asset that's an asset without an issuer, that's fungible, that's liquid, that could be held on a treasury, comparable to sovereign debt. But the difference is sovereign debt is going to have a negative real yield of 4% a year. And Bitcoin is going to appreciate, even in the long term, after all this near-term adoption and the bull markets run out. If you roll the clock forward a decade, 2 decades, you can expect that over the long term, over a century, if the S&P index appreciates 7% a year because the money supply is expanding 7% a year, Bitcoin should appreciate 14% a year. So Bitcoin is an appreciating asset on your treasury. Let's just say, I'm being very conservative, 14% a year, whereas you're getting 14% tax deferred, no tax, whereas if you hold the sovereign debt, you might get 5% taxable. So you're getting an after-tax yield of 3% on sovereign debt, and you're getting a tax-deferred yield of 14% on the Bitcoin in the conservative case. And then your alternative is the competitor is owning buildings and land, but as I pointed out, it's not liquid treasury assets. So I think that this FASB decision means that Bitcoin can now be a treasury reserve asset for mega corporations. And that's going to drive and open the door for corporations. Instead of investing all of their treasury assets in sovereign debt, they can start to allocate to Bitcoin. But here's a bigger idea. The bigger idea is Apple can't actually keep their cash flow right now. Apple generates hundreds of billions of dollars of cash flow, but they can't keep it because they know that the debt is negative yielding. So what they do is they buy their stock back, or they do acquisitions with it, or they dividend it out. Those are the 3 uses of cash of a public company. You either do an acquisition, you dividend out the cash, or you buy your stock back. And you go to negative working capital. So you borrow money instead of accumulate capital. And if I borrow $100 billion, then this dynamic of negative real yield works the opposite way. Instead of having a negative real yield of 4% on 100 billion, I have the positive yield because I borrowed 100 billion, right? And then I bought my stock with it, which is appreciating at 14%. So the big idea here is you could see a change in the way people view treasury theory, and companies start to keep their cash flows and invest them in Bitcoin because they can, instead of surrendering all their cash flows and running without any capital.
It's funny that you would mention Apple, because Apple TV has taken over the screen that's behind you and has replaced has replaced the picture that you had with with commercials for its shows. So are you saying that companies are now able to use Bitcoin basically as their savings account, as their piggy bank, and that something like this wasn't even possible before? And what about central banks?
Hold on one second. No free commercials for Apple.
I hope Apple stock didn't just crash.
Yeah, they'll do okay. Coming back to the issue of central banks, I think that the third catalyst before we get to central banks is just banks in general, right? Spot ETF is first on your checklist. Fair value accounting is second on your checklist, and then the embrace of companies like Deutsche Bank and Santander and J.P. Morgan and Bank of America and the like. That's third on the list. And I think as we start to see those banks step up and become custodians, first they'll be custodians, then they will actually begin offering financing and collateral, and accept Bitcoin as collateral. And then you'll start to see a whole set of Bitcoin derivatives and new products. Instead of just pure Bitcoin, you might see Bitcoin integrated with fixed income offerings, Bitcoin with volatility hedging. You might see Bitcoin-backed insurance plans, Bitcoin-backed bonds, all sorts of other Bitcoin-backed securities that'll be banked. And that will eventually ripple. So I think with regard to sovereigns, we already know some sovereigns are buying Bitcoin and they're mining Bitcoin. We've seen announcements from El Salvador, from Oman, from Bhutan, right, from the Emirates, and so that's spreading. But I think that'll continue to spread. But the next probably big support will come from sovereign wealth funds. And the sovereign wealth funds, first they'll take positions via the spot ETFs, and then they'll take positions via other companies, right? As companies embrace Bitcoin and put it on their treasury. Look, if Apple Computer just stopped dividending out their stock or stopped dividending out their cash flows and just started buying Bitcoin with their cash flows, the nature of the company changes, right? And any company that's a cash cow that starts accumulating assets in Bitcoin becomes one part power company, one part Bitcoin company, one part software company, one part Bitcoin company. And the degree to which you're a Bitcoin company versus a food company or an ice cream company or a real estate company just comes down to the portion of your enterprise value which is based upon the P&L versus the portion of your enterprise value which is based on your balance sheet. Right, and Berkshire Hathaway is an example of a company where a lot of it's based on its balance sheet. For example, substantially all of the success of Berkshire Hathaway is due to an investment in Apple stock in the past 10 years. And the returns of Apple stock for Berkshire Hathaway dwarf every other decision made in the last 50 years. Like nothing else that Berkshire Hathaway did mattered except to the extent that it allowed them to make the Apple investment. And so that, you could think of them as like a big tech stock in a way because they reoriented their balance sheet to one big tech asset, Apple. I think we'll see the same with regard to corporations and investors with Bitcoin. And countries typically are the most conservative, so it'll be the small countries. It'll be the nimble operations. It'll be the El Salvadors and the Madeiras and the Bhutans and the UAEs and the Omans. They'll move first. And the large countries, they'll be more conservative. for good reason. They don't have to move, right? And they'll take their time getting there. But that's why you should think about this as coming in layers and waves. You know, the first layer, the second layer. The next step will be gold funds that own a bunch of gold will sell half their gold and buy Bitcoin with it. And then hedge funds that have no Bitcoin will allocate 1%, and then 5%, and then 10%. And then companies that have no Bitcoin will allocate 5%, then 10%. And you don't, you know, there's this joke, right? Maybe it's Einstein said it. The reason we need time is so that everything doesn't happen all at once. So it's, you know, you might be frustrated it's not happening too fast, but you don't want it to happen too fast, right? If it happened too fast, Bitcoin would go to, if I said to you, guess what? Everybody watched Michael Saylor's talk and everybody on Wall Street agrees with him. And so they all bought Bitcoin. Tomorrow morning you would wake up and Bitcoin would be $8 million a coin. And what would you think? You would think, dang, I should have bought more when I wish it didn't happen so fast. You don't want it to happen that fast. Right now, we're in this very ideal situation. We'll remember this time period fondly. We'll look back at this. Bitcoin trading at 26,000. We all know what's about to happen. We all know corporations are going to adopt it. Wall Street's going to adopt it. We know the ETFs are coming. We know the capital is coming. We know everyone's going to wake up and figure this out, but they don't have the ability to buy it yet. So you know the future, but it has not manifested itself in the price. You're going to wish, you know, for these days back, because these are the days where you can work in a job at McDonald's and you can make whatever X dollars an hour and go buy Bitcoin. And one day, you know, you'll look back and say, I was actually making the equivalent of $8,000 an hour at McDonald's, right? And you know, if you actually are smart enough to work at McDonald's and buy Bitcoin right now, in 10 years, you're going to realize it was the most lucrative thing you did your entire life. And when everybody else embraces these big three ideas, when the banks custody Bitcoin, when the spot ETF is here, when companies are using Bitcoin in their treasury, then that opportunity is lost to you. Instead of buying Bitcoin at 25,000, you're buying Bitcoin at $1 million. And here's the way you should think of it. You're taking a 40x pay cut. You see, whatever you're making right now is going to be worth 40x less. So take what you're making right now, multiply by 40. That's what you get paid, right, in fiat in order to use Bitcoin as a treasury asset and keep one foot in the fiat world, because you understand the future, but the rest of the world, 99% of the world, hasn't caught up with you. And I guess what I'm saying is, I think they all know, right? I mean, a lot of them know. Some of them don't, but a lot of them know. But I sat with a guy's got $1 trillion in capital under management, and he couldn't buy the Bitcoin even if he wanted to. He couldn't, because he doesn't have the accounting systems, the on-ramps, the regulatory wrapper. So there are people out there that have more money than you that may actually perceive the same thing you perceive. They can't buy it yet. You should count yourself lucky if you actually have the ability to acquire it right now, right? Because you jumped through the hoops, you got KYC'd on a crypto exchange, because you've got a relationship, right? You have an advantage. The advantage is for a window of time. It will actually never be this good again, in my opinion.
Well, we might not be able to move the Apple stock, but it's absolutely possible that 1,000 people were now smashed by Bitcoin on their phones and move the Bitcoin price a little bit after you make us feel a little bit bullish here. We here in Germany, Austria, Switzerland, we do not have a MicroStrategy. We do not have politicians that talk about Bitcoin on the level that you have. We don't have the rules, the SEC. We don't have Wall Street. But I can tell you from my personal perception that outside the US, this is by far the strongest Bitcoin scene, with builders, investors, content creators, the lot. What's your message?
My message is the die is cast. We have crossed the Rubicon. We have crossed the event horizon. Um, Before COVID, before 2020, there were lots of questions about would Bitcoin be adopted by Wall Street? Would Bitcoin be adopted by the United States? Would Bitcoin be embraced as an asset class by the mainstream? A lot of milestones took place to take us to where we are today. The end of the block size wars was pivotal. The entry of Fidelity into this ecosystem was pivotal. They were an early leader. The COVID crisis was pivotal. If there was no COVID, I never would have bought Bitcoin. MicroStrategy would not be involved in Bitcoin. No, we would not have been allowed to even consider it. So COVID catapulted us into the space, and following us, we saw dozens of publicly traded Bitcoin miners catapulted into the marketplace when Wall Street caught fire. And then we saw the entrance of Square, Cash App, now Block, PayPal. We saw the embrace, first the challenge of the accounting treatment. No one was concerned about the problem of Bitcoin accounting when there were no publicly traded companies with Bitcoin. So it became notable when public companies entered the space, and within 36 months, we had the accounting community embracing Bitcoin. And the politicians, right? Cynthia Lummis was elected, right? She came to DC as a senator. The Biden administration brought Gary Gensler to office, and Gensler has probably noted the unique innovation of Satoshi on no less than a dozen occasions, right, under congressional testimony. So Bitcoin came to Congress, Bitcoin came to the Senate, Bitcoin came to the White House, Bitcoin came to the Wall Street Journal and Bloomberg. Bloomberg, launched their crypto coverage. All of these things happened, and that ushered Bitcoin back in front of all the money managers, first with the futures ETF. But we couldn't have the spot ETF if we didn't have the futures ETF. So the futures ETF created more demand for the spot ETF. And all of the crypto controversy created all the lawsuits, which created the clarity coming from the legal system that Bitcoin is a commodity. So these last 36 to 48 months have been pivotal. We've now reached this point where it's clear that Bitcoin is going to be successful. It is going to be embraced. It's just a question of to what degree will you benefit from, right? So I'm not worried about Bitcoin anymore. You shouldn't worry about Bitcoin, right? People that are launching these spot ETFs, they're not worried about Bitcoin. They're not trying to change Bitcoin. They've only got one question on their mind, which is, how do I make sure that my ETF is the most successful one? How do I make sure that my Bitcoin offering is the most successful one, right? And that's the question you should ask yourself, right? How are you going to stack? The winner is the person who stacks the most effectively. If you're going to contribute to Bitcoin, how are you going to create a Bitcoin product or service that respects the protocol that provides value to the billions of people that are going to want it? If you're offering a Bitcoin security or a Bitcoin financial product, how do you create the one that people are going to want? If you're analyzing Bitcoin or advocating or educating, the question is just how are you going to do that most coherently, most effectively? And I think that's the challenge that all of us face. If you stay focused on Bitcoin, stay cheerful, stay constructive. Don't let the trolls distract you, right? Like someone wants you to basically sell all of your worldly goods, because the world is coming to an end because of too much something in the atmosphere in 100 years. Don't get distracted. Don't get distracted by someone that wants you to change the code, change the protocol. there's nothing wrong with Bitcoin, right? The issue is what's wrong with you, right? Do you have your head screwed on straight? Are you focused? Are you doing everything you can do? Bitcoin doesn't need your help. You need to help yourself. And so I think that's my message to the audience is focus upon what you can do for Bitcoin, right? Like focus on how you're going to embrace the protocol. You're either a buyer or an investor. That's good. Or you're an advocate. That's good. And, you know, if you're using your fame, your power, your money in order to further the Bitcoin ecosystem with humility, respecting Satoshi, respecting the protocol, respecting the work done by people before you, right? Then you're going to be successful and happy. And I think the people that are fighting it, right? The people working on the next Bitcoin, the people that are trying to fix it, I think they're just squandering their life's energy. They're not going to be successful. They're not going to be happy, right? Because the writing is on the wall here, right? And the great irony is Bitcoin is poised, you know, for 100x from here. And you have all the information to figure it out. And so if you're jaded, if you're fatigued, if you're bored, if you've decided to move on to the next thing, if you're trading altcoins to get more Bitcoin, if you're juggling razor blades, if you're fighting with people on Twitter to try to fix Bitcoin, right? You've lost the plot, right? It's the great tragedy would be after 15 years, Bitcoin emerges to take its rightful place in the universe as the humanity's first and only sound money. And when it finally reached that point, you get distracted and went off to do something else. I would say focus on Bitcoin. Put the laser eyes back on.
Michael Saylor, thank you for this message. Thank you for taking the time for doing this interview, not just for me, but from all the people in the audience here. I hope we can do this again in 1 year and see what has happened in the meantime, because so much is happening. But I do think we understand now why you don't get tired of talking about Bitcoin. And thank you also for that.
Yeah, thank you for having me. And I'm sorry I can't be there in person, but everybody in the audience and everybody who's a Bitcoin believer, thank you for everything that you do for Bitcoin. Every single person makes a difference.
Thank you, Michael Saylor.